A very warm welcome to one and all viewing this lecture. I, CA Pujin Kapadia, welcome you all on my today's lecture on the subject accountancy and taxation. Friends, as I have told you in the last lecture, we are going to start with a very fresh topic today. Yes, friends, the topic for the day that we are going to cover is goods and service tax, popularly known as GST, which is the buzzword as of now in the income tax. Fine. As a result of which, whenever we are talking on taxation, it becomes inevitable for each one of us to understand what GST is basically all about. Just to give you a brief, in our syllabus, we are having only theory part from this particular chapter so that you can well focus on all the concepts. You need not to worry how it is being done practically for now, but what you are supposed to focus basically is the theory portion of this subject. As a result of which, before starting my lecture, I would just like you to request you that you need to clear out each and every concept, because GST is all about well implementation of the concept. And when you step ahead in your practical life and want to practice as a GST practitioner, it becomes very necessary to interpret each and every concept that you have studied under GST law. As a result of which, I would urge you all to go through thoroughly through each and every topic that we are going to cover in our lecture. So with this, I would like to start with the topic. The first slide is basically introduction. So before starting the topic, let us see how this thing has come in India. First of all, around 160 countries have implemented GST or VAT. You know what is the full form of GST? It is goods and service tax. VAT full form is value added tax. Before implementation of GST, on every supply which was being happening within the state, that is trading, selling, fine, VAT was applicable before GST. In short, the first point talks about this particular act has been implemented around the world in about 160 countries. Second point read as France was the first country to implement GST. Can come as an MCQ, right? Which was the first country? Answer is France. In India, GST was introduced with effect from 1st July 2017. Remember this date, friends. You may come across this date many a times as a short question. As a result of which, I would like to repeat it once again. When GST was introduced in our country, it was introduced on 1st July 2017. What is the slogan of GST? It is One Nation, One Tax, which basically talks about that whatsoever transaction of supply I am doing throughout the country, there should be only one kind of tax liable to each and every transaction. As a result of which, the previous complexities, that is, I need to understand many different acts in order to do any kind of trading or supply or manufacturing. What the government's ideology was to cover each and every transaction under the bucket of one tax only. As a result of which, there can be ease of compliance, that is, complying laws becomes easier, and at the same time, complexities are being reduced. So the slogan is very well written over here. The slogan read as One Nation, One Tax. I have given you the website of GST, that is www.gst.gov.in. You can just type this website on Google and just explore all the points which are written over here. Friends, please take a note. If you will go on this particular site, you can read as many materials till date which are being issued by the GST department, which includes various acts under GST, various circulars, notifications, due dates, format of returns, etc. So I would just like you to request, being a taxation student, it is necessary that you are at least aware how does this website looks and what are the contents that you can easily get from the website. It is a self-learning portal so that you can easily explore the same. Let's move ahead to the next point. What are the tax rates, or I can say tax slabs for GST? As of now in our country, basically almost all the products are having any of these four tax rates of GST. It is 5%, 12%, 18%, and 28%. So any product you trade in or any service you provide, the rate of GST which is applicable on that is falling in either of these four rates. As a result of which, it becomes necessary for us as a tax student to remember the rate of tax under GST. So all the goods and services which are supplied in our country are basically governed by GST at the rates of 5% or 12% or 18% or 28%. There are certain special rates for special products. For example, gold. The rate of GST on the trading of gold is 3%. If there are any rough precious and semi-precious stones like diamonds, the rate is 0.25%. So basically friends, this is just an introductory side. If MCQs are coming in your paper, this can be the case. This slide may have certain hidden questions which may come across as an MCQ. So more or less what we need to remember over here, I'll just quickly repeat all the points. First is around 160 countries have implemented GST in the world. France was the first country to adopt GST. In India, it came into effect from 1st July 2017. What is the slogan? One nation, one tax. What are the tax rates? 5%, 12%, 18%, and 28%. For special products, it may be special, like for gold, it is 3%. For semi-precious stones like diamond, it is 0.25%. Just also take a note, friends, there are certain products which are being stated in the list of GST, but the rate of tax is 0%. So yes, certain products can also have GST rate of 0%. It means it is included under the list of GST products, but as of now, what is the rate of tax? It is 0. So 0% can also be told as one of the slab tax of GST. I'd just like you to request to take a quick view on all the points I have written over here. Well, friends, I hope you have gone through this particular slide. So let's move ahead to the next slide. The heading of this particular slide is Limits of Aggregate Turnover for Exemption from GST Registration. This slide is basically going to talk about when you are supposed to take registration under GST. So basically, just for your general understanding, if you are doing any kind of business, whether you are dealing in any kind of selling of goods or you are providing any kind of services, up to a certain amount of your total turnover, you are not liable to take registration under GST. That is, you can say in either way, GST is not going to be applicable on your particular part. But since you reach that particular limit, the particular threshold turnover limit, which is being stated in the Act, you have to compulsorily take a registration of your business under GST. So in this particular slide, what we are going to study is, we are going to study the limits of aggregate turnover, reaching which you need to take compulsory registration under GST. Let's start with the first point, that is point number A. If you are a businessman who is dealing into exclusive sale of goods, it means you are into the business of selling goods. That is exclusive. You are not providing any kind of services along with selling of goods. Let's take an example. If I am a cloth merchant, I am selling all the categories of clothes. Fine. Then I am having goods, that is clothes. I am not providing any kind of service. So I am going to be the part of category A. For example, I am having an electronic shop, say laptop shop, under which I am doing two activities. One is I am selling laptops, that is I am selling goods, but at the same time simultaneously what I am doing, I am taking contract of annual maintenance of various information systems. So at the same time, what I'm doing is I'm providing services also. Then this is not going to be the part of category A, because under category A, there is only one category covered, those who are exclusively dealing with the goods, no service element involved. I hope you are clear with the heading. Fine. So if you are doing business which is covering only goods, then you are going to be the part of category A. But those goods should not include three things that I have written over here. Ice cream, pan masala, and tobacco are out of the purview of point number A. Fine. Okay, let's see. If you are doing this business in a normal state, what is normal states and what is special category states? Let me clarify it. There are 11 special category states. This is just a different classification which is being given in this particular act. Those special category states include Arunachal Pradesh, Assam, Manipur, Jammu and Kashmir, Meghalaya, Mizoram, Nagaland, Tripura, Sikkim, Uttarakhand and Himachal. So you can remember it in such a manner. 7 sister states, that is northeastern states, plus hilly areas like Himachal Pradesh, then Uttarakhand and Jammu and Kashmir. These 11 states are kept under the heading of special category states. So all the other states other than this 11 are going to fall under the normal states. So I hope you are clear with the classification. Special category states are the states which are being given special status, which includes basically your northeastern states, those 7 sister states, fine, and other hilly areas including Jammu and Kashmir. And the second is normal states, that are other than these 11 states, all the states are going to be the part of normal states. Now let's come back to our topic. If I am a businessman who is into the business of exclusive sale of goods, and if I'm belonging to any normal state, then the turnover limit is 40 lakhs. That if my total sales, my aggregate turnover, if it is up to 40 lakhs, I am not supposed to take GST registration, which means I am having exemption from GST registration. So when I am going to take this particular registration, only if my total limit exceeds 40 lakh rupees. If I am a part of special category states, that is, if I am doing business in any of these 11 states, then the limit is going to fall to 20 lakh rupees. That is, if my total turnover is up to 20 lakh rupees, I am not required to take any kind of GST registration. But as and when my total aggregate turnover increases 20 lakh rupees, I am going to be liable to take registration under GST. तो आपको registration कब लेना है? So if you are dealing in normal states, the limit is up to 40 lakhs. You are not supposed to take any registration. If you are dealing in special category states, the limit is 20 lakhs. Two things to remember over here. Exclusive supply of goods would be there, and limits are 40 lakhs for normal states and 20 lakhs for special category states. Let's move to category B. Those categories are for service providers. That is the persons who are actually providing services like chartered accountants, lawyers, any person who are giving certain software contracts like annual maintenance contract, etc. All those are classified into the head of service providers. Now, again, the limit is going to change over here. If you are a service provider in a normal state, suppose I am having a chartered accountancy practice in Gujarat, then I can say I am a service provider in normal state. What is the limit? Limit is 20 lakhs. If my aggregate turnover is up to 20 lakhs, I'm not supposed to take any GST registration. But if my aggregate turnover exceeds 20 lakhs, I need to take GST registration. And for special category states, limit for service providers is up to 10 lakh rupees. So there are 4 different limits that you are supposed to remember. First is for exclusive goods and second is for service. For goods, it is 40 lakhs and 20 lakhs. It is exactly ADA, 50%. And for service provider, it is 20 lakhs and 10 lakhs. I hope you are clear with this particular slide in which I have talked about up to what amount of your aggregate turnover. क्या देखा जाएगा? आपका total turnover, total sales. You are not supposed to take registration under GST. That is, you are exempt from taking GST registration. I would just like you to request to take a quick view on the limits that I have mentioned over here. Well, friends, I hope you are clear with the limits that are stated over here. Yes. So till now we have covered two topics. First was introduction, that are certain short questions, and second was limits of exemption for GST registration. Let's move ahead to the third point. The heading read as subsuming erstwhile indirect taxes under GST. Before starting this topic, let me just give you the brief overview. GST came into effect in India from 1st July 2017. So क्या उसके पहले कोई indirect taxes नहीं थे? Answer is of course not. थे, fine. As a result of which there were certain indirect taxes like excise duty, value added tax, service tax. Now all these tax were put into one basket of GST. So at the time of transforming or transiting all these taxes under the one head, what all were the principles which were adopted to convert all those taxes into GST. So are you getting aware about the topic that we are going to study? What I'm going to focus about as of now is when the government decided that they want GST to take over all those previous indirect taxes, there were certain rules, certain principles which were supposed to be followed. So what we are going to study as of now is सारे indirect taxes को इकट्ठा करके जब GST में convert कर रहे थे, when we were transforming all the taxes, indirect taxes into GST, what were the principles which were adopted at that particular point of time? We are going to study that particular part. The first principle which is written over here is whenever I am going to add all the taxes into GST, all those taxes that I am going to transform should be in the nature of indirect taxes. So there should not be a direct tax which is being converted or taken into the bucket of GST. All those taxes which are transformed should be indirect taxes. Second is it should be a part of transaction chain. The taxes that I am subsuming into GST should be the part of transaction chain. That is, whenever I am doing any transaction, like manufacturer is manufacturing a product and is selling to the wholesaler, who is further selling to the retailer. So those taxes should be levied in this particular chain, either by manufacturer or at the end of wholesaler or at the end of retailer. But it should be the part of this transaction chain. I hope I'm clear. Fine. It should not be like that it is not involved in this particular chain of transaction. The first point that was taken care of, that I need to ensure only indirect taxes are being clubbed and transformed into GST. Second point, I had taken care of that the taxes that I am going to club under GST should be the part of transaction chain. Third is it should result in free flow of tax credit, that is intrastate and interstate levels. Now first of all, what is tax credit? What is intrastate, interstate? Let's understand. That word tax credit means as of now, if I am paying tax of rupees 5 to the person from whom I am purchasing the goods. So what is the tax I am paying? I am paying 5 rupees. Now further, I am selling that particular product and collecting rupees 15 from my customer in the name of tax. So simple calculation over here is when I have bought that particular product, I had paid 5 rupees as tax to my supplier. And now when I have sold that product, I have collected 15 rupees as tax from the supplier. Now what government will ask, sir, आपने 15 rupees collect किया, so you need to pay 15 rupees. But what I will say, sir, to sell this particular product of on which I need to pay 15 rupees tax, I had already paid 5 rupees tax previously. As a result of which, what government is going to tell me, sir, your liability was 15 rupees, of which you have already paid 5 rupees. So you can deduct those 5 rupees, and as a result of which, you now need to pay me 15 minus 5, that is 10 rupees. Now, I have got the benefit of those 5 rupees that I had previously paid. This is nothing, this is known as tax credit. It is taking the credit of tax that you have previously paid, which again we are going to deal it in a form of short note in the upcoming session. But for now, just understand the benefit of the tax that you have already paid is being availed to you, then such is known as tax credit. Fine. Second is what is intrastate and what is interstate. For example, I am living in Gujarat. If I am selling a product from Surat to Ahmedabad, now in this particular case, the transaction is taking place between these two cities. But is it in the state or outside the state? Answer is in the state, because both the cities belong to Gujarat. As a result of which, such transactions are known as intra-state transaction, that is within the state. Now again, I'm selling from Surat, but I'm selling to Mumbai. Now this is a interstate transaction because it is outside Gujarat. As a result of which, if the transaction takes place, that is buyer and seller both are in the same states, it is known as intrastate transaction. If it is outside the state, then it is known as interstate transaction. So the third principle that was being adopted at the time of accumulating all the indirect taxes which were the part of transaction chain into GST, it was taken due care of that there should be a free flow of tax credit. That is, the principle of tax credit should be applicable to all those particular indirect taxes also. And last is revenue fairness between union and states. Now let me explain you friends. Whenever we had a previous tax structure, that is I can say pre-GST era, GST आने से पहले, we were having value added tax which was being levied by the state government. As a result of it, the revenue that was being earned was going in the pocket of states. When service tax was levied, service tax was going to the union, that is center. Now let's assume all those taxes are converted into one tax whose name is GST. Now GST, if it is directly going into the pockets of union, that is center, then it is injustice at the end of state. And if it is being going into the pockets of state government, it is injustice to union. So we need to take utmost good care that the income that a government is earning from collecting GST should be properly apportioned between the central government and the state government. As a result of which, revenue fairness is a word which is basically depicting the proper allocation of tax revenue between the central government and the state government, that is between the union and the states. So if the question comes up that what were the principles which were adopted at the time of transforming or adding all the previous states into the one bucket called GST, so these 4 points are your crux that you need to explain in that particular question. I hope I'm clear till here. Yes. Okay. Let's move to another short question that can come up in your exam. Commodities which are kept outside the purview of GST. So now we are going to read certain commodities, fine, which are not covered by GST. They are outside the purview of GST. First is alcoholic liquor for human consumption. First is any kind of alcoholic liquor which is consumed by human are outside the purview of GST. That is, GST is not applicable on this product. So what is applicable? The previous indirect taxes are still applicable on this particular commodity. Second is electricity. Fine. See, this is just a simple question. So you just need to remember the names. And third is 5 petroleum products as under petroleum crude, motor spirit, which is known as petrol, high speed diesel, natural gas, and aviation turbine fuel. You are supposed to remember all these names. So if a question comes up, which commodities are kept outside the purview of GST, this is going to be your answer. I'm just giving you a moment. Take a quick overview on the points which are written in this particular slide. Well, friends, I hope I'm clear with this particular topic also. So let's move to the next topic and probably the last one for today's lecture. Dual GST. First of all, a short note can come up for 4 marks like what is dual GST, or write a short note on dual GST. So let's understand. Before starting with this topic, as I have stopped in the last topic, that is revenue fairness, under which I have explained you in order to collect or apportion proper amount of tax revenue between the central government and state government, there should be a proper percentage which is fixed, so that whensoever GST tax is being paid to the government, there can be a proper bifurcation between how much amount is going to central government and how much amount is going to the state government. Keeping this particular point in mind, government has come up with the framework of dual GST. So if the question comes, what is the basic concept on which the concept of dual GST was introduced? Answer is fiscal federalism, which means revenue fairness, which means central government and state government should get the right share that they were supposed to get if GST was not in place. In short, there should not be injustice in apportionment of the tax revenue between central and the state government. So what is at the base of the concept of dual GST? The concept of fiscal federalism, that is revenue fairness. Now first point is, actually as of now, if I am doing any intrastate supplies, intrastate means within the state. Our example was from Surat to Ahmedabad. This is known as intrastate supply. What are the GST tax which are applicable? Answer is CGST and SGST. That is Central Goods and Service Tax Act and the State Goods and Service Tax. If I am dealing within the Union Territory, then the answer is going to be CGST and UTGST. That is Union Territory Goods and Service Tax. In short, whensoever we are doing any intra-state transaction, you are supposed to pay two different GST. One is going into the pockets of central government and another is going into the pocket of either state government if it is a state, or a union territory if it is a union territory. So for example, if I'm doing any transaction in the city of Daman, now Daman is a union territory, as a result of which two taxes will be CGST and UTGST. So what I want to say you friends is, over here, what government has decided? They have decided the framework of dual GST. That is, they are collecting taxes of GST. Taxes only one, that is GST, but they are covering that amount in the two different names. Now, for example, my product is falling in the tax rate of 18%. We have seen it in the first slide, different tax rates. So I am dealing into the product on which the GST is applicable at 18%. So what I am supposed to do is, I am going to pay 9% in the name of central and 9% in the name of state. In short, the total tax rate is also going to remain the same. But what I have done, I have equally divided it into two parts so that there can be maintained revenue fairness. I hope I'm clear with this. Yes? Okay. Third point is for interstate supplies. Now, what is interstate supplies? From one state to another. What is applicable? IGST. What is the full form of IGST? Integrated Goods and Service Tax. Guys, you are supposed to remember all the names which are written over here. So if it is an intrastate, that is within a state, it can be CGST and SGST, that is central and state. And if it is in the union territory, then it will be CGST and UTGST. Fine. If it is interstate supply, that is from one state to another, then there is only one tax, that is IGST, full form of which is Integrated Goods and Service Tax. Once the IGST is connected, it is levied and collected by the center on the interstate supplies. So who is basically collecting the particular thing? Central government. Afterwards, it would be distributing to the state as per the ratio decided. In short, I am just supposed to remember which GST is going to be applicable if I am doing intrastate supply and if I am doing interstate supply. Please remember this one. Okay, fine. Now, I am going to read pre-GST period. That is, before 1st July 2017, there were several indirect taxes which are applicable in our own country, India. Let's read it. First was tax on manufacturing goods, which was under the name of excise duty. That is, if I am manufacturing any kind of goods, I need to pay a tax, name of which was excise duty. If I am providing any kind of services in our country, then I need to pay service tax on it. So manufacturing goods pay excise, on services it was service tax. These taxes were being governed by central government. So the amount was going into the pockets of central government. Now, if I'm doing trading, if I'm selling my goods intrastate, that is within the state, that is from Surat to Ahmedabad, that is within a state, which tax was applicable? It was value added tax, that is VAT. VAT was governed by state government. So what I want to prove by this point is pre-GST era, that is before GST, there were certain indirect taxes which were being collected by the central government and certain indirect taxes which are being collected by the state government. In short, whenever I have converted all these particular taxes into one name, that is GST, I am not knowing how much amount should be going to center and how much amount should be going to state. As a result of which, I as a government, what I have done is I have implemented the concept of dual GST so that there can be a proper demarcation, there can be a proper allocation between the revenue or the tax collection to the central government's pocket and to the state government's or the union territory government's pocket. So basically, concept of dual GST is nothing. It is just distributing or setting up a framework in such a manner that proper fair amount is being distributed between the center and the state. So CGST and SGST, as I told you, it is being levied simultaneously. So if I'm selling anything from Surat to Ahmedabad, and if I'm covered at the tax rate of 18%, I'm going to pay 9% as CGST and 9% as SGST. And when, under which act it has came into force? The answer is Constitution into bracket 101st Amendment Act 2016. So by this act, this concept has been came into force. I hope you are clear with the point on the concept of dual GST. So dual GST, as the name suggests, two GST. Two GST, that is CGST and SGST, or CGST and UTGST if intrastate, and if it is interstate, then it is going to be IGST, that is Integrated Goods and Service Tax. Major focus of revenue fairness, that is proper allocation of my revenue between the center and the state. I hope I am clear with this. Okay. So now it's the time to test your knowledge. The same procedure is going to continue. There will be 5 MCQs. I am going to give you 30 seconds for one MCQ. In that time, you need to mark the correct answers. At the end of all the MCQs, we are going to discuss the correct answers. I hope you are ready with the same and your time starts now. Well, friends, I hope you are ready with your correct answers. So let's check them one by one. The first question was the first country to adopt GST was, as we have studied in the introductory slide, it is France. So correct answer is option D, France. Which of the following is not the rate of GST? Primarily, we have seen four rates of GST. They were 5%, 12%, 18%, and 28%. Option C, that is 15%, was not the rate of GST. So the correct answer to this question is option C, 15%. GST came into effect in India on 1st-2017. Correct answer is 1st July 2017. So it is option C. Fourth question was basically based on that aggregate turnover limits cloth trader in Gujarat. So first of all, let you know there are 2 points over here. First of all, it is a cloth trader. So it is a good, fine. So it is actually dealing with exclusively in goods. So we are going to take care of the first limits, that is category A. He is in Gujarat. Whether Gujarat was a special category state? No, right? So it was a general or a normal state. As a result of which, what was the limit? The limit was 40 lakhs. As a result of which, up to 40 lakhs, he is not required to take any kind of GST registration. So correct answer is option C, 40 lakhs. Why? Because he is belonging to the normal state, plus he is dealing or he is trading into exclusively goods. Next question, that is question 5. Chartered accountant. Now, he is a service provider, right? Chartered accountant is service provider. Where is doing business? In Sikkim. Now, Sikkim was a special category state. Yes. So again, combination of service provider in a special category state falling under category B. Fine. Answer was 10 lakhs. As a result of which, correct answer to this question is option A, 10 lakhs. Please remember the limits. It was for goods, 40 lakhs for normal, 20 lakhs for special category. And in case of services, it was 20 lakhs for normal and 10 lakhs for special category. With this, I, CA Pujan Kapadia, thank you all for your patient listening, and I hope to see you all very soon in my upcoming lecture. Thank you, friends.